Hey, folks, what's going on? Here we are. You're not watching an old episode. This is crazy. You got four people on today that you probably haven't seen together in a long time. We're bringing it back. This is the news show between Market Rebellion and Trade the Chain. It's calling, trading. It's called. I'm sorry, we had our first little thing. I had a little sound interruption.
That didn't take long.
No, I whipped this right off the bat. Anyway, Trading Rebellion is our new show between Market Rebellion and Trade the Chain. This is where we're going to bring you insights and ideas as well as cover the market all in real time. And it's really particularly important that we started this now because of where we are in the market. A lot of questions coming into the four of us on, hey, what do I do when times are tough like this? Is there anywhere to make money? Well, there is. And we have some strategies, some real world strategies that are making us money right now that we're going to go over to help you through. As you know, we have CJ. He is a senior analyst from MarketRebellion.com. We have Monty, also a senior analyst from MarketRebellion.com. And we have Nick Mancini, our director of research and chief community officer at TradeTheChain.com. So welcome everybody, and thank you for joining us. Let's kick it off with some macro. We got the live chat open as well. If you guys have any questions, so please drop them in there. And we're going to format this. It'll be about 30 minutes or so. And we won't forget on the news that just dropped, which is Silvergate deciding to abandon its business and go to liquidation. So I know that's on the top of everybody's mind right now, but we'll wait till the end. CJ, take us away.
I think I'm leading off with macro.
Nick, you want to?
All right. That's two strikes against me. Third one, I'm just going to turn my camera off.
I think Alex is in the twilight zone right now. I don't think he's in Puerto Rico anymore. So yeah, the battery's he's been celebrating the Voyager news a little too much. So
that's right.
To go ahead and dive in. So before I dive into anything related to traditional markets, the biggest things that we've seen recently in terms of sell pressure or lack of buy pressure, Voyager's been offloading some assets, obviously, to manage bankruptcy and creditors. Mt. Gox, Bitcoins, and other assets are coming into the market relatively soon. I believe the U.S. government also has a lot of crypto that it is trying to offload. And then we obviously have Silvergate, and whoever is within that network is dealing with, obviously, the woes of no longer having a banking partner and having to liquidate assets to manage winding down such a large bank. So you've got kind of four large kind of, let's call them specters sitting over the market, kind of staring at us. And then in addition to that, tomorrow we have employment numbers, which you can see on the screen that I have shared. The last print for last month was 517,000. I believe that was a more than 2x what was expected. So the expected number for tomorrow is 225,000. Anything more than that, in my opinion, is going to send the market probably into more fear, meaning lower price action. Whether or not, I think depending on how wide of a miss or a beat it is will depend on momentum and volatility. But I'm certainly not expecting a rosy picture or of a Friday market session if this number is higher than 225,000. And that is because we are at max unemployment. Remember, Jerome Powell has two mandates, leading the Fed: unemployment and inflation. Inflation is extremely difficult to dampen and decrease when you have max unemployment and people still spending like we don't have 6% inflation. So very much something to consider there. And then, of course, on Tuesday, we have CPI. Now, the Cleveland Fed is predicting that CPI year over year is supposed to come down to 5.4%. from 6.4% previous, which is a major drop. But the big issue is that core CPI is not expected to come down much, which will create some interesting market reactions, I think, next week, depending on where those prints come in. If regular CPI is coming down, which is generally how consumers are affected, but core CPI is increasing, which is generally how producers and sophisticated investors are affected. If the core CPI is not decreasing, that could certainly be still a worrisome sign in the market, even if CPI is decreasing. So two big data points to watch out for both tomorrow and early next week that will likely affect price action and momentum. And remember, a lot of assets, both equities and crypto, are nearing support after being beaten down for February and March. So having these two data points, and the Fed, Jerome Powell in front of Congress literally said, although we are thinking of higher for longer, and that seems like the case, he didn't say that literally. He did say literally, we are still data dependent. So if he's posturing hawkishly, but the data comes in, from a dovish perspective, that'll definitely make the market question the current momentum that we've seen to the downside, in my opinion.
All right. Thank you very much, Nick. And, also I forgot to mention at the top of the show, we're sitting below $1 trillion in total market cap in the crypto markets. I know that has some people down, but we're going to address that and go over some things. CJ, take it away on what you got to bring us.
Thanks. Yeah, just kind of picking up with some of these macro events like employment and CPI next week, obviously being a big catalyst. I don't know if it really matters in terms of like the number that actually comes out. It's more about the positioning of the traders going into the actual event. So like think about the last CPI that we had where it actually came in higher than expected, yet the market rallied because everybody was short and they got stopped out of their shorts and were forced to cover. So regardless of like the number being bullish or bearish, it kind of depends on the positioning going in. So let's talk about that. I also want to talk about like the NASDAQ and specifically positioning and the idea of like contrarian trading. So the idea of contrarian trading is the fact that 95% of traders are going to lose money over time. It doesn't matter if you're trading in TD, Ameritrade, or KuCoin. I mean, the statistics are what they are. So taking the opposite side of those traders, I think with managing risk can be potentially profitable over time. So how does that equate to positioning and where we are right now in the NASDAQ? This particular chart right here in this data is known as COT data, or otherwise known as the commitment of traders. So futures traders, if you're above a certain amount, you have to report your position sizes to the FTC or CFTC every single week. This is to prevent people from cornering the futures market. So as a result, we get this data and we can actually use it for pretty optimal positioning. So here we see the yellow is small speculators, the green is large speculators, and due to the fact that they're all, on the bottom side of this zero line, means we have a lot of shorts stacking up in NASDAQ. And when we get levels on this oscillator that are like above above like 95 in terms of the commercials, that's when I think it's an interesting time to get long. So just personally, like I am long NASDAQ right now. And, if you were to ask me, like, are you bullish or bearish on the market? Like I wouldn't, like I am neither bullish or bearish on the market. I mean, in terms of Bitcoin, I don't really have an interest to get long because like there's just no momentum and we have the turmoil that, of course, you mentioned earlier. But like the positioning ultimately is you had a ton of bad shorts get, short right here at the market. And now we've rallied and a lot of those shorts have covered. And in terms of positioning, we've actually seen a lot of shorts get short once more on this rally. So if we keep going up, like these people are going to have to cover and we're going to go to probably 13,300. Now, is that going to happen? I don't know. That's not what I'm saying. What I'm saying is considering the fact that everybody's already long fixed income or in cash getting their 4% or sidelined, like they're not, like the crowded trade, in my opinion, and you see this by the COT data, is short NASDAQ. So the risk reward, nobody is prepared for a move to go to 13,300. And, when 95% of people are in a particular position or think a certain way, very oftentimes they lose money. And so, if we can make money on the back of that, that's something that's quite desirable. But overall, that's the general premise and why I remain long NASDAQ. There are a couple other assets we can go into as well that I think are interesting, non-correlated contrarian trades. But I want to pass things to Monty first to give his take.
Yeah, thanks, CJ. You made a lot of great points there. So did Nick. And I just kind of want to talk about how I've been positioned in the last couple of days to weeks here and how, it's benefited me. One thing that you mentioned is that, you wouldn't want a long Bitcoin right here because, where's the buy pressure coming from? And that's a great question, right? Obviously, the Silvergate news is affecting the price action of Bitcoin. We're seeing that clear as day today, getting hit hard, and shorts are beginning to pile in. You can see that as evident from the funding rate on exchanges like KuCoin beginning to flip negative. So, but one thing about Bitcoin that's interesting, and I think that a lot of people don't really take into consideration, is that a lot of the best buying opportunities in hindsight are some of the most difficult to buy. For instance, here on February 13th, this was not an easy buy by any means. Sure, we had support from the 20-period smooth moving average, but a lot of people were worried about a breakdown and possible retrace of this move up we made at the beginning of the year. So this was not an easy level to identify as a level to buy. Of course, you could have waited for this bit of momentum, but we've seen momentum like that without continuation. Ultimately we did get moved up to 25K, and it turned out to be a great buy at this level. So one strategy that I've been employing that's been working out very well for me is kind of trying to make myself delta neutral in the Bitcoin market. People talk about Bitcoin as being risk on, or crypto in general as being, a risk asset market. It certainly is, but with proper positioning and with discipline, which is something that we really kind of try and drive home at Market Rebellion, you can stay long Bitcoin and keep your P&L relatively neutral to positive by also shorting the altcoins. So for instance, one position that I took on was a long Bitcoin position, but I was also short Fetch AI. Fetch AI, for those of you who don't know, has recently been pumping on the back of the AI-driven narrative that has everyone, in its grips, whether it be from ChatGPT or from the graph. AI is a very hot narrative right now, but it is beginning to fade. So one thing that I did is I went long Bitcoin 3x and I shorted Fetch 5x. This allowed me to, because one thing that you'll definitely notice is that when Bitcoin goes down, Fetch tends to go down with it. And if Bitcoin does break down below these levels, yes, I'll get stopped out of my trade because I set my stop loss right below this critical level here, because we have a clearly defined critical level, formerly resistance, formerly support. Now we're right at this level. I'm content to cut this trade, but let my Fetch short run, because in the meantime, if Bitcoin continues to slide, the altcoins I expect to show a higher beta, and I think Fetch will be one of those. So it's kind of a way to make yourself delta neutral, and rather than just sitting on your hands during this kind of unpredictable price action, I think that you can remain active and also mitigate risk by shorting some of these overextended alts. Fetch is just one example. There are others, things like GRT. I think also provide a great example of this. But by shorting these assets and remaining long Bitcoin, it allows you to have that exposure to Bitcoin. And like I said, when you look at the Bitcoin chart, some of the best days to buy in hindsight have been some of the most hard to recognize. And also, if you look at Bitcoin from like a weekly chart, a lot of these moves happen very, very quickly, and you don't want to get, you don't want to, miss one of these moves just because of, negative sentiment. So one thing that I like to do to keep that long exposure is, hedge with short altcoin positions while remaining long Bitcoin. And, once my stop gets hit, that's fine. I'll continue to ride the Fetch position down, but I will look to re-enter Bitcoin because I want potential exposure if we do get a short squeeze, or if we do get, just a move to the upside. I want to have exposure to that. And like I said, those opportunities are often difficult to identify. So by, getting long Bitcoin, getting short the altcoins, it allows me to stay in the market relatively delta neutral. And, CJ scoffs at that, because anyone that, actually, is calculating delta would say that, this is not a delta neutral strategy. there is still risk involved, of course.
It's as close as you're going to get in crypto without proper options liquidity. So, I mean, you might as well hedge like that. I've done the same. So,
Yeah. And quite frankly, it's been working out nicely for me. So I figured it was something I'd want to share with you guys in this first episode. Something I encourage you to try and familiarize yourself with, because this is a very difficult market to trade, and predicting where Bitcoin might go on any given day is kind of almost like a coin flip. And because of that, I think you want to approach this market with discipline. Make sure you have exposure in both directions just in case, and really just protect yourself from the downside. It's almost like buying insurance. Sometimes you'll be paying for it and it won't do anything for you, but when it does do something for you, you'll be very grateful, because it will protect your P&L very much. So that's all I got. Pass it back to you,
That
Al.
was good, Monty. That was good. Nick, how are you making money these days? I know you and I talk about this quite often, but why don't you share some of your insight with the viewers as well?
Yeah, I think what's the best? I think, is my screen share still on?
Yes, it is, sir.
Okay, cool. So, I'll tell you what, one of my favorite strategies, and I'm sure Monty and CJ will tell you this as well, has started to disappear. The equities and crypto correlation has died a bit. We are seeing it pick up a little bit, but we are not seeing such clean movements out of crypto as we are to equities. But I think the easiest way that I've been trading is this level to level trading, is picking out exactly where resistance and support is and what ranges look like. Now, I'll zoom in on the 1 hour for equities just to give you a really good visual for this type of trade. Now, when we broke below, you don't have a defined range, but obviously we made the low, we had a flat open here, so expecting some bounce back, but you once your range is formed, you have a much better idea of exactly how you can trade, and your range was immediately defined as soon as this candle shot back up to resistance. So if you're looking at it, this is the top of the range. It was defined by the VWAP reversal, which is another indicator that I really like for short-term trades. It's fantastic for resistance, supports, and typical reversal of momentum. And so if you were trading this, you would basically say, you would long, on a support retest. Maybe you closed at, where the recent high was the local high, but you were possibly targeting either the estimated moving average or the VWAP. So you had a really good, long opportunity here with obvious resistance, and then, a decent short opportunity based on exactly where that VWAP was. So if you are range trading or doing something a little bit more of an intraday perspective, the market's giving you really clean range setups. And I'll just move over to Ethereum as another example. Now, this isn't as clean as I think most people would like, but it's quite obvious in terms of where the highs and the lows are when you're talking about trading. So this was a bit of a, not exactly a swing failure pattern, but a very beautiful wick with price, testing that area. The resistance was obviously coinciding the estimated moving average and the recent lows from last Tuesday. And then we obviously just slid down back lower into this range, over the past few days. So if you're just range trading, what you're trying to do is just short the highs and long the lows and hope that it works out. And it's not going to work out every time for a multi-hour trade, but if you're longing the lows, you can potentially get a scalp if you're longing, the liquidity test down here, or you're shorting the liquidity tests up here. So that's been a lot of where I'm making my money, a quick in and out. Alex, you and I are quite busy with a lot of things going on in our lives. But when you're seeing a lot of this wicking action and basically everything is just either playing, a deviation outside of a range or a range to range play, it makes life a lot easier when you're just making those kind of quick action trades. And I guess, moving to Monty and CJ, are you guys seeing similar? Because when we're looking at Bitcoin, this was the range that we were trading in, clearly easy shorts as long as it had a close, or as long as it started to break below current supports. And now we're at the lows of February. So if you were playing this short, which I mentioned on the daily show, as soon as it breaks under 22, you short and you target 21.3. That's in terms of where the market's been, that's it's giving you quote unquote easier trades based on these supports and resistance levels. And of course, like Monty mentioned earlier, I'm looking at the 12-hour versus the 1 day, but Bitcoin saw a 1 day catch on the estimated 200 moving average here. So I'll zoom out. This is what Monty was talking about, is the catch here. We're obviously below it now, but we're on top of the 12-hour, which is an equally important time frame when you're trading. So you've got confluence of support here, but we obviously still have those macro issues. So, equal to what Monty was saying, I would probably look for a long at 21.2 if we got a swing failure pattern from that level back up into the range. That would be my signal for a long. Else I'm looking for a close out of 21.3 or below 21.3 to then hopefully short back down to 20.5, which is the range that we were trading in mid-January. So very, very much, just range trading level to level, respecting support and resistance, and then throwing in weekly VWAP as well as estimated 200 moving average.
All right, very cool. I want to touch on some things and get your guys' opinion on this. So as I share my screen, where's the one? Let's see here. All right. So as I share the screen here, we can see that today's market cap below $1 trillion. We've been right over the $1 trillion mark for a little bit and was kind of excited. What I want to scroll down to is right down here, and I want to get your guys' opinions. This is the stable coin exchange net outflows for the last 24 hours, and some of these are pretty big. These are about 50 million a piece here. You have, I'd say, about 300 and something million to only one big wick of about 43 million going in. What are your guys' opinion on what's happening in the market as far as liquidity within the playing field?
Yeah, I mean, I saw one of those was GCR withdrew 40 million from Binance, and people asked him about the transaction, and he's like, "Oh, I'm just going on vacation. I don't want to have this risk. I'm going to self-custody it." So, I mean, I don't know if you can really draw too much from this, other than the fact that we just don't have excitement about crypto or buying pressure. Something that I've been saying is I'll be sidelined. I'm content to just sidestep a potential decline, but I'm more than happy to get back in once things become fun again. And we're just clearly not there. It's quite depressing out there these days, if you have noticed.
Yeah, and think about how much the market has, or just kind of the way this market operates has changed in the last 6 months. 6 months ago, you could be earning 7% yield on those stable coins for keeping it on a plethora of exchanges. Nowadays, there's not many places where you're going to be getting, more than 4% yield on your stable coins. So even that is hard to find amongst these.
Yeah, Coinbase, I think, has 4%, right, Monty?
What's that?
I think Coinbase has 4% on
Yeah,
stables,
I
right?
think so. And that's basically just T-notes, right? Look at the 10-year treasury yield, it's approaching 4%. So maybe people are just realizing that, why keep my money, in a stable coin when I can, put it in treasury notes and yield at least 4% for the time being. Well, Bitcoin kind of does nothing, but you could also look at it as what CJ said, people looking to self-custody. Also, when you see those sort of exchange outflows, you wonder if it's for participation in DeFi or to get exposure to some lower cap altcoins. That could also be the case, but yeah, it's tough to glean exactly what that information means. But Nick, you got any thoughts on those stablecoin flows?
Yeah, I think there's two sides to this coin. I think the GCR thing was interesting. I think anytime.
Well, I just want to say I can confirm the CEO of GSR is on vacation. He's in my dinner chat, and I just asked him.
So GCR withdrawing 40 million, definitely a little bit sketchy. I think any high net worth individual saying they're going on vacation, right before a subsequent likely market drop is certainly something to be concerned with. We've definitely dealt with our fair share of crypto deities that have not done well by us long term. So I'm not ready to say that anything nefarious, but it is, when you're seeing that pulled off, whether there's a legitimate excuse or not, it's worrisome when people who move that kind of size are definitely, having the same kind of feelings that we are on this show and the viewers that are watching. So the two sides of the coin for this is that if there's liquidity being withdrawn, it's very much the same as quantitative tightening. You're reducing the amount of available liquidity. There's less volatility. There's less market participants. And so that's just clearly a sign of a market, I don't want to say dying, but certainly contracting. And so the other side of the coin is, well, if everybody's in stables and getting 4% on or 5% on treasury yields, then what happens if we rise 5% across any market? Will you feel like, you got left, holding the wrong type of asset? So the risk, the benefit of the T-bills is that you get that solid yield, but you're obviously not beating inflation. And if something good happens, a fundamental catalyst in the market, you're not positioned to capitalize on that upside. So there's and I'm hearing both arguments of equal voice in the market right now, which is putting more of a contrarian hat on my head. The saying goes, don't fight the Fed. And Jerome Powell was pretty clear in the fact that, they're thinking about a 50 basis point hike and that we're likely going to have a plus 5% terminal rate going into 2024. But on the other hand, I keep hearing data dependent, and I have a feeling that the data is going to come in where we want it over the next 2 to 3 months. So whether that positive reaction comes next week on CPI or whether we get a massive dump on the March FOMC and then we kind of pick the pieces up after that, that I'm not sure. But I am ready to start saying that I think a lot of the people that are stabled up in cash might have the wrong long-term outlook. And I think next flush we see, whether that's short-term or whether we're experiencing it now, I think will be probably the next really good buying opportunity for long-term, in my opinion. Because, once Silvergate's done, once Voyager's done, I guess you have Celsius to worry about. You've got BlockFi to worry about. But I would be shocked if they weren't matching Voyager's energy and offloading on the biggest pump of 2023 and managing their bankruptcy process in kind like that. So, hey, what's going on?
Oh my God. Well, here it is. John in the studio today.
Welcome back.
What's up,
Your
Doc?
dreams were your ticket.
That
out.
video was awesome yesterday, John.
Good to see you guys. I love the way it sounded. Thank you.
I have one thing to add to that, Nick. Joe in the chats, he says, isn't this a typical market cycle? And I say this is far from a typical market cycle. We've had, all the bankruptcies. We've had now the largest crypto bank voluntarily come out and say, hey, we're liquidating our assets, which is going to hamper a lot. It's going to be a choking point for asset managers in the space. We're in a real world recession. Or heading into one that's, into some tough market headwinds. What is everybody's opinion about the halving? Don't forget, we've all been waiting, 2.5 years for the halving to come. And this may have been the rug pull of the century. Almost like the axis of the earth is now turned on its side. Are we going to pump at the halving? Are we going to go through our historical cycle? Or is this it? It's the Wild West.
Wait, Alex, I got a quick change of pace really quick. What Bitcoin just dropped below 21.3. We're at 21.1. I want to show everybody what I would like to see for a long entry if we got it.
Yeah, we're really moving here.
Yeah, so
It's because we took to the airwaves.
Literally, we'll have to do the up only tweet where as soon as they go live, the Bitcoin price dumps. But so if we're looking at the 4 hour here, and you can see, this line is a February low, which is why I called out 21.3. So we're now below 21.3. But the interesting thing is now we're testing this, the recent liquidity from, right before the move. So we just busted through kind of this, I guess you'd call this kind of like an MSB. And so, this would be the MSB, and then this is the breaker right here. So I can go ahead and draw a little bit of a clear rectangle. So this would be the breaker right here. all the way down to, I think, this candle body open. So if price can survive in here, I'm saying you can definitely experience a close in here as long as price reattacks. Well, I guess maybe on the 1 hour you accept a close here, but on the 4 hour, what I'd like to see is price ripping back up towards 21.3. If we can get a close above 21.35, I think you would see a lot of longs come in and momentum reverse. Now, if we close below this breaker on the 4 hour, then it's going to get ugly pretty quick, in my opinion. And obviously, you're watching it decrease as we talk live. So
is it already ugly?
The scenario is definitely less likely.
This might be the most depressing first episode ever.
Monty
Yeah,
and
wow,
CJ, do you agree if price was to survive in this breaker and close back above 21.3, that would be a decent long entry? Or do you guys still think that it just looks disgusting no matter what?
Just to say first, I think that you need to see broader risk assets rally, things like the NASDAQ and the Hang Seng index. Bitcoin kind of has a lag effect where it will slingshot up once those do. And if they're selling off right now, or at least being moderate, like if anything I was good along, it would be like NASDAQ or like some equity indice based on that earlier positioning I talked about. I don't think there's really a reason to jump in front of this right now.
Yeah, definitely not saying right now, but I'd say in 48 hours, if we can push a close back above 21.3, it would definitely get me interested again.
Yeah, I mean, my style, I don't really take short-term trades like that anymore. So I wouldn't really be participating either way. Monty, maybe you feel a bit differently.
Yeah, I think Nick's got, a valid point there. And one thing that I, have been kind of highlighting in terms of a range, Alex, if you could throw my chart up on the screen real quick. One thing that is pretty evident from what we saw on the way up was clear and heavy resistance, right around this 21.4 level. And we got rejected, came back down to about 20,500. And I think that is a possible scenario for Bitcoin here in the coming days, is retesting the bottom of this range here, which would be at around 20,500. And in this range, I wouldn't be buying right as we hit this level, but perhaps if we start to see, some supply absorption, some positive price action in equity markets, like CJ mentioned, I think all of that would be a buy indication. And again, this would be another chance to deploy that strategy that I was mentioning, in which, you go long Bitcoin and short the alts, because if Bitcoin does break down below this level, I expect some overwhelmingly negative price action. And not only alts, but one thing that we haven't really talked about today is the crypto-related equities. Look at this. Look at these crypto stocks.
Yeah.
We talked about Bitcoin experiencing a bit of contagion here today from Silvergate, but obviously most of it is coming in with Coinbase down 9%, Mara down 8%, MicroStrategy down 6%, Riot down 10%. All of these charts look very ugly.
Give us the Silvergate chart top to bottom real quick.
Yeah, the Silvergate chart completes the mess that is the crypto stock watch list section. And one thing that I mentioned, the altcoins as a means of hedging your Bitcoin position, but I also think you could do it with these crypto related equities. I think when you see Bitcoin starting to move like it is here, you'll get that fear in the equity markets. And these aren't necessarily crypto traders. These are speculators, people like Cathie Wood. And if Bitcoin continues to slide, you could expect to see some capitulation there. And if Bitcoin breaks down below 20,500, excuse me, I expect some of those crypto-related equities to get beat up even worse. So just another way to kind of hedge your position there. But I agree with Nick and CJ. I want to see both things. I want to see positive price action in the equity markets and kind of a flip back to risk on, which is not what we're seeing here today. But also some supply absorption at that critical level of about 25 or anything below 21K, I want to see buyers stepping in. So, you know, I'm not eager to jump on this buy train just yet, but if we got both those things, then I would be looking to buy.
All right, so let's go back to my earlier question before Nick brought us down even more today with the price action.
I market sold just to make that comment. Yep.
Yeah. Way to go.
What are we thinking about with the halving cycle? You know, historically, we know it's been a godsend for us, kind of keeping the markets in order and leading us into a bull cycle. But is that going to change with everything that's gone on? Is there too much?
My early signal is watch the LTC halving cycle, because that'll happen before Bitcoin, and it's the closest we're going to get to any sort of benchmark for what may happen in the future, although it's definitely imperfect.
I mean, like, all this scarcity stuff, it matters in the long term, but, think about something like Ethereum that is probably, I don't know if it is deflationary or not right now. I know it was temporarily, but like each halving mathematically is going to be half as significant as the prior one. And each cycle we've had diminishing returns. I don't know if you can really take anything from history here. I think you have to just kind of play it as it comes. If we do have another very strong bull market and things change, then I'm happy to aboard that train, but I don't really have a strong opinion in the interim. I just think that mathematically you have to understand that concept of diminishing returns and not expect too much. Everybody was expecting 100K. We never got it. So,
yeah.
Also, FYI, ETH as of right now is 0 or minus 0.08% deflationary. So it's the supply is decreasing by 0.08% per year. Almost a full percent.
Is it underperforming Bitcoin in the last 6 months or
yes, you're correct there. I was just giving the stats on the deflationary aspect.
So yeah, I mean, I don't know how much of a fundamental driver these things really are. I think it has more to do with like sentiment and positioning and liquidity. So, I mean, we'll see, right? We'll see.
Yeah. And I think in the long term, of course, halving events are significant. Everything about Bitcoin's value, not everything, but, if you actually, look at what Satoshi would have, kind of based Bitcoin's value on, it's the supply and demand relative to the scarcity of it. And although we've seen so much speculation, like CJ mentioned, last market cycle when we had that halving, plan B and 100K seemed like an inevitability. That ultimately ended up burning a lot of people. So even though, we have this positive catalyst of, supply decreasing over time, that takes a long time to kick in. And most of the price action that we see as a result of a halving is speculative. And I think that was really evident from our last halving cycle where, we first saw some positive price action. That we did see some genuine positive price action at the start of 2020 when we had people like Paul Tudor Jones buying into Bitcoin, pre-halving. But then we had that, second wave of speculation that had a lot of futures, lots of liquidations, lots of speculation from retail traders. And I think that in itself was far more significant than any, supply-demand dynamic coming from the halving. But that being said, I do agree that in the grand scheme of things, I still love
it's
Bitcoin.
a nice narrative, right? It's a nice narrative. So perhaps it gets the people going.
It is a nice narrative, but it's still
I guess the question also begs is like, what happens to miners that are undercapitalized in that position, and then are they offloading? Is their debt bad? There's a whole nother economical question to be asked about the halving cycle now that mining is literally at scale and people are, hinging their entire businesses on the miners that they're purchasing for collateral and stuff like that. So, or as collateral with their investments and stuff. So I think the market dynamic may change in relation to the halving because of just how big of a beast the mining network is in relation to the future of the network. So
Yeah.
something to
I
consider.
like
I don't
it.
have any, I
Well,
don't have anything quantitative for that yet, but I think
no,
we're
listen,
thinking in the right direction.
trying to leave this show on a light note. Okay, it got a little dark in there. Everybody's been watching us for the last 40 minutes. We appreciate it, but these are the truths, and you heard some of the strategies. That the pros are using. This is what Monty, CJ, Nick, they shared some of the stuff. Yeah.
Do you mind if I just share 2 more setups? I'll make it very quick, I promise. I just haven't.
No,
I didn't
go
get
ahead.
the-
We can go Joe Rogan and just do this for 3 hours if you want.
All right.
Jesse, fire up the DMT.
All right. So what I like to do and what I have been doing lately in terms of things outside of crypto is looking at trading futures, whether they be commodities or indices. The thing that I wanted to bring this up, or the reason why I wanted to bring this up, is there's a very interesting like decorrelation I'm watching right now between the 10-year T-note futures and just NASDAQ and everything else. Like rates are actually going down right now, despite the fact that like the market is dropping quite a bit, which I think is pretty interesting and pretty bullish for like a long position in the 10-year T-note futures. But the reason why I took that trade was because and that was a correlation matrix that you were just looking at. That's just a site I like to look at. So you monitor these positions and understand their correlations so that you can kind of trade intra-market without worrying about risk on or risk off. So the trades that happen to be very crowded right now are like fixed income. Everyone's long fixed income, thus they are short the 10-year T-note futures. So I have a long in that particular position with stop loss below the recent low. And that's a crowded trade. And the fact that it's actually bullish right now due to the fact that everything else is selling off, I think is pretty good for like a bull thesis there. I mean, we'll see if it happens, but I don't know. 2 more that I want to talk about, and this is the whole concept of like fading the narrative. I'm sorry.
Now you know what I
It's
do.
okay. I'm just saying you started off with 2, so now it was really 3. Go for it.
Okay, so I'll go back to sharing my screen very briefly. This is an interesting article. I don't know if you guys have been paying attention, maybe not if you live in Florida. There is some really, really bad things happening, as many would say.
Not the oranges.
Basically, all the orange crop in Florida has been decimated because of disease as well as like storms and such. So if we look at like data, this like orange juice has absolutely ripped in the last few months. You have speculators getting long all up until this point, and then last week was the first indication of like reversal candle. So, I think once you start seeing news like this, where people are really paying attention to the underlying commodity, you're usually very close to a top. And when really bullish news comes out like this and price closes down, to me, that's a news failure where I get short or I take the opposite side of the trade. And the stop is going to be right at the top of that level. And that's going to be my stop forever. So that's a very interesting narrative going on with orange juice right now. And then the other one that's quite interesting is cattle. So as soon as this article came out, I think it almost top ticked the cattle futures price. But overall, when you see this type of rhetoric where people are saying things that sound like they're saying this time is different, that's when I usually try to start taking the other side of the trade if there is a news failure. So Americans need to be prepared to eat a lot less beef because the size of national cattle herd is steadily shrinking. What if people just stop eating beef? Like it's not an inelastic good, or like these prices will mean revert is what I'm trying to say.
Does that quote say the worst food disaster
Since 1962.
the worst food crisis in modern history?
Zero Hedge is the king of delivering you the news in the worst way possible.
I think CJ's just trying to shill beyond burger. I'm not sure. There could be something here.
No, I'm shorting it. I'm shorting the beef cattle. So if you look at this all across, potential double top, max long positions and speculators, And what got me bearish on this and saying, okay, it's time to take a shot on the short was the fact that we're probably going to close down on the week despite, Zero Hedge literally top ticking this with their article. So same thing as orange juice, right? Stop loss goes up here on the 6th, the day of the article getting published. And that's going to be my stop forever. And, the whole point of using the COT data and taking the contrarian trade is, one, over time, your returns become inversely correlated to the market. So if you ever want to do something in like raising money or capital, you can say to potential investors, my returns are not even correlated to the market, and they have, good Sharpe ratios and things like that. So that's why I like the aspect of trading uncorrelated markets and looking for those market turning points where the sentiment is at like an absolute extreme. So sorry to drag the show on an extra 5 minutes or 7 minutes.
It's okay. That's an interesting aspect.
We're not gonna go over eggs.
I have no sight into that. I don't think you can trade them, and I don't think they have futures contracts. Otherwise, I may be looking into shorting those because it's
also
the same thing.
Go ahead. Sorry.
No, I was done.
I was going to say, I thought it was interesting. Zero Hedge said the worst food crisis in human history, and beef prices aren't even near the 2014 highs, which I also thought was interesting. So can't be the worst one in food history when it's not even at that recent highs. So
no, those articles, I think you could just fade it. As long as you manage risk accordingly, I think you can just go against that article and fade it, because when you have a news failure, it's so important to pay attention to. It almost tops all markets, and it also creates market bottoms. Think about the Coinbase IPO news that virtually topped 2021 when price couldn't close higher despite that really bullish news. That's a news failure and an indication to get short, or just dump all your longs. Now, an example of that in the inverse is FTX or Digital Currency Group going under or having FUD after FTX. Did those things improve the fundamentals of crypto? Like, of course they didn't. But they bottomed because you had a negative news event, yet price closed up. And to me, that shows that the market is just out of sellers and the positioning is exhausted. So positioning is ultimately what moves markets. Fundamentals matter, but they don't matter as much because they're discounted in the price. And positioning, in my opinion, is all that matters in terms of getting an edge. Another rant. Sorry.
There you have it. Trading places straight from Chicago, running for the options on the oranges. I like it.
Just wait until CJ has to take physical delivery of that cattle.
I'm shorting it.
Folks, don't forget, we're thanks for joining us for this maiden voyage of the show. We do have over 200 shows together. We just haven't been on together in just under a year and a half, so we're out of practice. So thanks for putting up with all our mistakes. We're going to be doing Trading Rebellion will be every Monday and Thursday, 1 o'clock Eastern time. So don't forget to set the alerts, tune in. And then also this evening, I believe, forget what time, 6 o'clock Eastern. I'll be on Revolution Radio on a Twitter Spaces here with Mark Lopresti, John Nigerian from Market Rebels, and myself and a couple other cats. So tune into that as well. And I don't know, any parting words, guys?
Hold on to your handlebars, I guess. Pray.
Hang on to your handlebars.
Hang on your handlebars.
These data points are positive, so that hopefully the narrative around the Fed can change. If not, we're staring down the barrel of a potentially bearish March heading into the FOMC meeting.
One thing I will say is that, to end on a more positive note, is that I agree with Joe in the comments that, well, his first comment, I agree with the second one as well, but, there are plenty of opportunities in this market. Things may look bleak, but that doesn't mean there's not opportunity. And, with that opportunity comes the ability to make money. And hopefully we can, kind of highlight some of those opportunities here on this show for you guys.
Yeah, absolutely. I mean, I think it's most important that we're here with you during the bad times as well as the good times, right? So we'll take this journey together. And don't forget to visit marketrebellion.com, tradethechain.com, and tune in for free every Monday and Thursday right here on Trading Rebellion. Thanks, folks.